Okay, so having looked at ISA 505 on external confirmations, we move briefly into ISA 540, and this focuses on accounting estimates, including fair value estimates and related party disclosures. So this ISA focuses on enhancing the rigor and skepticism in auditing accounting estimates due to the risk of management bias and potential earnings manipulation. So these ISAs help, or this ISA 540 help to provide clarity on the risk of management bias. So management may be biased in overinflating or overestimating. So estimates in terms of depreciation, estimates in terms of accounting policies to be used, and also earnings manipulation in their estimates. So as auditors, we need to provide clarity and also be skeptical about these estimates. Are they realistic? Are they objective? And I hope they are not overinflated. So skepticism, our professional skepticism is very essential in auditing accounting estimates. ISA 540 requires auditors to obtain an understanding of how management identifies and make their estimates, and also assess estimation uncertainty, and also review prior period estimates, their results, compare their estimates with actuals for prior results, and also see the current year they are auditing. So the understanding of estimates is very important by the auditor. Management's estimates as provided to the auditor should be very, very realistic, and also in assessing risk, uncertainties in the estimation needs to also be assessed by auditors. Also, prior period estimates and how they fared and the results will help auditors with a clue on how the future or the current accounting period they are auditing is faring. So this ISA mandates evaluating significant risks, alternative assumptions, and the adequacy of disclosures, ensuring compliance with financial reporting framework. So ISA 540 is strict in ensuring that significant risk, any assumptions that is alternative, and the adequacy of these disclosures also to ensure compliance with IFRS reporting frameworks like IAS 37 and those other IFRS or ISAs that deal directly with this ISA 540 is very important. So ISA 37 on accounting estimates and the recognition of events, it's very important that we understand how those estimates come about and those standards that we applied are consistent with what management has estimated. So additionally, auditors must critically assess management's judgment to detect bias and ensure reliable financial reporting. So this is critical because management can be very overblown. They can overblow their estimates, so we need to bring checks and balances to it, and also ensure that every bias and unreliable financial reporting is detected, and this is brought to a normal or realistic estimation. So this is very important for the evaluation of ISA 540. So key takeaways, we must understand that auditors must understand the basis of how the estimates are made, review prior period estimates, ensure they are in compliance with IFRSs, like I stated, IAS 37, accounting for estimates and prior other events. I think accounting estimates, and there is a term used, I can't really remember the ISA, but I know it's IAS 37, and that IFRS is very, very important in this reporting framework. Okay, so that's it for ISA 540 in brief. Do we have any question before we go to our quiz very quickly. Any question on ISA 540?
Yes, I think I'm not grabbing it. I don't know why.
Okay, it's a technical ISA. So maybe I just go over it again. So
Please, thank you.
Okay, you're welcome. So accounting for estimates are not actuals. So it's an estimation like forecasting. So our financial reporting has to do with a lot of estimations. So your depreciation is estimated. Some of your accounting policies, your revenue, so those are estimations like budgets and all that. So in auditing these estimations, we need to ensure that they are reliable, they are not overblown, and they are also areas where potential earnings and frauds are not are not perpetrated. So it's very important that we take note of this accounting for estimates. And one of the financial reporting framework that should be used as the benchmark for this is IAS 37. IAS 37. I'm trying to remember what IAS 37. I know it has to do with accounting estimates and provisions, exactly. So provisions, contingent liabilities, and contingent assets. Exactly. So provisions are more of estimates. So contingent asset, contingent liabilities is what that IAS speak to. So in estimating and making provisions, management need to be consistent with that financial reporting framework, IAS 37 and every other IAS like IFRS 13 on fair value. So these two standards, IAS 37 and IFRS 13 on fair value, need to be applied graphically so that estimations will not be unreliable and unrealistic. That is what we are saying. So in doing that, auditors need to understand and identify what management used to make the estimate. What are the yardstick? What are their inputs? Then they should review prior periods that estimates have been made. What is the result? So if the results are consistent with the estimates, then it's fine. Or if it's not consistent, it shows that most of them are unrealistic or overblown. And that is why this ISA is very important. It's a salient ISA. So it mandates evaluating risk, alternative assumptions, and also adequacy of those disclosures, and making sure that they align with the IFRSs or IAS that they were used to come up with those provisions. I don't know if you have some light is gotten some light on this, right?
Yes,
okay. Okay, fantastic. So additionally, auditors need to be critical about estimates and management's judgment. So some management team may be very, very biased and come up with unrealistic estimates. So we need to, as auditors, put that in check and ensure it's controlled and whatever estimate they are making is realistic. Okay, thank you for that question. Any other question? Please, if you are not clear, these areas are very, very potential testable areas in the real exam. So please ask questions if you need clarity. Any other question before we go to the test? Okay, I believe our silence means no question. All right, so number one, ISA 540 accounting estimate. What is the primary reason for the revision of this ISA? A, to simplify the auditing process for accounting estimates. B, to improve the rigor and skepticism in auditing estimates and address management bias. C, to eliminate the need for fair value assessment. D, to reduce the auditor's responsibility in reviewing estimates.
B.
ISA 540.
B.
Okay.
I choose B.
Okay, J is speaking B. All right.
B.
Wow, everybody's A. Okay.
I think
I is picking B. T is picking B too. U is picking B. Wow, everybody's B. A, what did you pick?
It's B. Sorry, I'm jotting down something. That's right.
Oh, okay. B picked B. Five of you B. Wow. All right, we'll see. Number 2, according to ISA 540, which of the following is not a requirement for auditing accounting estimates? Understanding how management identifies the need for estimates. B, evaluating estimation, uncertainty, and significant risk. C, ignoring prior period estimates as they are relevant to the current audit. D, assessing management's alternative assumptions and outcomes. According to ISA 540, which of the following is not a requirement for auditing accounting estimates? Okay, who is that? T or I? Who just spoke now? Is that T or I? Okay, I picked B. All right.
C. I picked C, sir. C.
Oh, okay. It's C. Sorry. I thought it's B you picked. Okay, so I picked C for question 2. So let me go over it again. According to ISA 540, which of the following is not a requirement for auditing accounting estimates? A, understanding how management identifies the need for estimates. B, evaluating estimation, uncertainty, and significant risk. C, ignoring prior period estimates as they are irrelevant to the current audit. D, assessing management alternative assumptions and outcomes. So I has only answered.
D.
D, what's your
B.
D.
Okay, J picked
D for
You.
D
I'm
for
hearing
dog.
you. Okay, yeah, D for dog.
For
Okay,
ball.
so you say B for ball.
Yes.
So I think this question is tough. They are having differing opinions. That's good. All right, so we're waiting for T and A now. T, what's your pick? I like this question. It's making me smile. T is still thinking. All right. So A, what's your pick?
I'll go with B.
Okay, A is going with B. All right. So we're waiting for T. So J picked D. I picked C. You picked B. Then A is picking B also. Okay. According to ISA 540.
No. Can I change it to D?
Sure. Why not? Please change.
I'll go for D.
D for dog.
Okay. T is going for B. Then A is changing to A. What are you changing to?
Dog. C, dog.
Oh, okay. Okay, T is going for dog. Sorry, T is going for D. Okay. All right, A, what are you changing to?
And I'm also going for D. D.
Okay.
The dog.
Okay, A is going for D. A is going for dog. Okay. Final answer: J, D, I, C, T, D, U, B, A, D. Final answer. Okay, that's good. I'm glad we have differing answers. Okay, number 3. What aspect of the audit does ISA 440 align more closely with? A, the audit risk model. B, the financial reporting framework. C, the concept of materiality. D, internal control assessment. What aspect of the audit does ISA 540 align more closely with? Those questions are a bit tricky. That's good.
I'll go with A.
Okay, T is going with A. All right, the audit risk model.
I'm going with B, financial reporting framework.
A is going with B, the financial reporting framework. So we're waiting for J, I, and U.
I'll go with B.
J is going with B. We're waiting for I and U. What aspect of the audit does ISA 540 align more closely with? It's like this ISA is tough.
I picked B.
And you like it, yeah?
Yes, I like it. U is picking B, okay? So we're waiting for I now.
B.
Yes, you. I got you. I got your thought. So B, we are waiting for I now. I has not picked.
I choose B.
Okay, is that I choosing B too? Okay.
Yes, I, sir.
I is choosing B. So we have 4 B's, 1 A. Only T is taking A. All right, we'll see. Number 4. Why is it important to evaluate estimation uncertainty under ISA 540? To identify potential significant risk, to determine the level of auditor independence, to ensure management provide estimates based on previous periods only, to avoid reliance on external valuation experts. Why is it important to evaluate estimation uncertainty under ISA 540? A, to identify potential significant risk. B, to determine the level of auditor independence. C, to ensure management provides estimates based on prior periods only. D, to avoid reliance on external valuation experts. Tricky question. Okay, so what are your picks?
The answer is not there.
Wow, I'm happy. Look at him, scoring 100 over 100. Every standard 100 over
I'll go
100.
with A.
Imagine.
The answer
I'll
is
go
not
with
here.
A.
Mhm.
Okay, A is going with A. All right, A. Good. Okay, so let me write J. Now, J said the answer is not here, so let me write it. Answer not there.
No, wait, so I will find the answer. So I will find
Go with
it.
Okay, I heard you say something. You are going with what?
C.
Is that
I
you
was
or
you,
T?
sir.
Oh, okay, I thought I heard you
still
speak you. Okay, so I think T is saying something. T was saying something.
Yes. Yes.
Okay,
She
T, what did
none
you
of
pick?
the above.
Apple. Apple.
Okay, A for apple. Okay, T is going for apple too. A. Okay. Who is saying none of the above? You is saying none of the above.
No, I will answer. Don't
No,
worry.
I said she is saying.
Okay.
C.
I think
Okay.
A.
Okay, you is picking A also. All right. So we are waiting for J and I as
C.
they brainstorm. Okay, I is saying C. All right.
A is more like it. A is more like it. The others don't seem. A
Are you
seems
sure?
okay.
Are you
Yeah.
sure?
I'm trying
Final
to be
answer.
sure.
Final answer for J. A. Final answer.
Yes.
Okay. All right. We have 4 A's and 1 C's. We'll see. Okay. So final question. What should auditors assess when reviewing management's judgment and decision under ISA 540? A, the possibility of management bias. B, the financial impact of the audit report. C, whether management has changed since the prior year. D, whether financial statements have been prepared for tax purposes. What should auditors assess when reviewing management's judgments and decisions under ISA 540? A, the possibility of management bias. C, okay, B, financial impact of audit report. Okay, so A is saying A. All right. Then C, whether management has changed since the prior year. Then D, whether financial statements have been prepared for tax purposes. So A picked A. J, what's your pick? I, what's your pick? T, what's your pick? Oh, okay. J picked A too.
I go with A. Go with A.
Okay, T goes with A too. Okay. So remaining you and I as they brainstorm. You and I, what's your pick? Who picked D? I or you? Somebody picked D. Can you come again? I can't hear you. Okay. Like the person has changed his mind. What should auditors assess?
B.
Okay, so you is picking B.
Financial.
Right. So we're waiting for I now. I, what's your pick? What should auditors assess when reviewing management's judgment and decisions under ISA 540? This ISA is tricky stuff. Good one. Good one, good one, good one. I, we are waiting for you. Is I still on the call? Yes, you are still on the call and you are not muted. So make a pick. Hi, are you there?
I hope the person has not slept off.
I'm trying to stop and he's not muted.
It's not muted, though. You are not. Are you there?
That happens to me often.
Maybe he has been slow. Okay, we may have to go on now because of time. So when he comes back now, we'll look at it. All right, so let's move to our answers. Number 1, what is the primary reason for the revision of ISA 540? B. Wow, everybody got it. B, 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 B. Okay, good job, guys. The revision of ISA 540 was necessary to strengthen the audit of accounting estimates due to the risk of management bias and earnings manipulation. It introduced stricter requirements to ensure skepticism, accurate assessment of estimation, uncertainty, and better documentation. All right, good one. That was good pick. Number 2, according to ISA 540, which of the following is not a requirement for auditing accounting estimates? The answer is C. Who got it? Wow, I got it. Only I got it. Wow, only I got it.
Ignoring from
J picked D, so J is wrong. So why is J wrong? Assessing management's alternative assumptions ensure that estimates are reasonable and not manipulated. So D is wrong. Correct answer C. C is saying ISA 540 requires auditors to review prior period estimates, exactly, to assess management consistency and identify potential bias. Past estimate helps auditors evaluate accuracy and the need for adjustments, exactly. So T also picked D, which was wrong, and you picked B. Okay, so B is wrong because evaluating estimation uncertainty helps auditors identify areas of significant risk. So U is also wrong. A picked D. D is also wrong. Better. So we're getting.
Okay, we did say that ignoring prior period. Okay.
Yes.
Irrelevant today. Okay.
Which of the following is not? So you can't ignore.
You can't ignore. Yeah.
As they are irrelevant to the current audit. Okay, that's
this
good.
This not is always a problem for me. Telling you, whenever they say not, I say, okay, I don't enter.
That's a good one. At least you guys have dropped points. You have dropped points. I'm happy. Okay, number 3. What aspect of the audit does ISA 440 align more closely with? Wow, almost all of you. J said B, wrong. I said B, wrong. It's only T that got it. T said A. Then you said B, wrong. A said B, wrong. Wow. These questions are really tricky. Wow. So it's only T that got it. Now the correct answer is, what aspect of the audit does ISA 540 align more closely with? The revised ISA 540 emphasizes the need for auditors to assess risk associated with accounting estimates, ensuring alignment with the audit risk model. Exactly. This involves evaluating inherent risk, control risk, and detection risk to estimates. Yeah, it was stated. So you guys picked B. B is wrong because compliance with the financial reporting framework is necessary but does not define the standard primary focus. Exactly. So B is wrong. Well done, T. That's a good one. Okay. So number 4. Wow, virtually everybody got it. Only I failed this one. Why is it important to evaluate estimation uncertainty under ISA 540? Correct answer is A, exactly. Majority got it. J got A, T A, U A, and A also A. So it's only I that said C. So auditors need to evaluate estimation uncertainty because high uncertainty may indicate significant risk that require further testing. Misstatements in high-risk estimations can materially impact financial statements. Exactly. So C is wrong because estimates should be based on current and relevant data, not just prior period figures. Exactly. All right. So, you are back. Can you hear us now? We're calling you, but it's like your network or you dozed off. Hello, Ife, are you there?
I is muted.
Okay, I is muted. Yeah, so he will unmute now. Ife, can you unmute, please? I think it's his network. Maybe his network is challenging. Okay, so let's run. We can't wait. All right, so number 5. Yeah, everybody got it. A. One of the main objectives or main concerns of ISA 540 is the risk of management bias. Exactly. Where estimates may be manipulated to achieve financial goals. That's true. So auditors must critically assess whether estimates are reasonable or designed to mislead users. Exactly. So J picked A, T picked A. You failed it, you picked B. Okay, so B is wrong. The financial impact of the audit report is not the focus. Yes.
I noted the correction.
Okay, that's good. I also said the slides so that we can go through it over again. So the financial impact of the audit report is not the focus on the review. The goal is to assess estimates, not the report's implication. Okay, so let's call J. Wow, Jake scored 60%. Jay, wait, this you have refused to go below 60%. That's good, though.
Is it not good? By the grace of God, so it shall be.
Very good, though, because in the exam, man, 60% is a good score. Is a good score. I like that. I like that. Okay, so I has scored 2, so that's 40%. But he didn't answer number 5. So T, wow, T, that's good. 80%. T scored 4/5. Exactly. Good one, T. You scored 2, 40%. Okay, so you need to wake up, you need to come up above 40%. A scored.
Okay, sir.
Yes, A scored 60%. Nice one. So A and J. Yeah, so T did very well in standard 540, 80%, 60, 60, 40, 40. Okay, so 40s, please come up. You guys need to do better. All right, so let's move. ISA 550 related parties. ISA 550 related parties. Okay, so let's look at this standard very briefly. It addresses the risk associated with related party transactions and relationship. It has implicated major or caused major scandals like Enron and WorldCom. Yeah, so this is a notable ISA because I'm sure it's an offshoot of the major scandal in the US, Enron and WorldCom in the year 2000. Very notable frauds, and most of it happened because of related party transactions and their disclosures. So please take note of it. The revised standard ISA 550 enables or enhances the auditor's responsibility to identify and assess the risk of material misstatements due to fraud or error arising from undisclosed or improperly recorded related party transactions. So, for example, you are the chairman of the board of your company and you award contract to your wife to the sum of millions, or the current fraud that goes on in companies in Nigeria where politicians would create fictitious companies, put their family members as owners of those companies, and they are awarding state contracts to those companies. So those are heavy fraudulent transactions and related party transactions that culminates in fraud. That of Enron, where activities around these same related parties transactions were posted in the financial statements to related parties unverified by their auditors at Anderson, and several related party relationships that jeopardized objectivity, and the auditors couldn't pick that. So this ISA is very important because related party transactions are very risky, and conflict of interest coming in related party transactions and could culminate in very significant frauds in organizations. So please take note of it. These are potential testing areas. So this ISA requires auditors to understand the entity's internal controls for identifying, approving, and disclosing related party transactions. So Auditors need to be sure of the internal controls in identifying, approving, and disclosing related party transactions. So, for example, in my office, we have a very serious policy on, we call it no spouse policy. So, for example, husband and wife cannot work in our company. One person will have to resign. That's how to start from the foundation to deal with related party transactions. So if you're a husband or both of you met one-on-one here, single, most companies will tell you one person has to leave the job. If you are on the board of directors, you cannot award contracts to your company or your wife or your spouse or somebody related. It's against our policy, our procurement or our policies. Exactly. Please go ahead. Yes, Aisha. Yeah, please. Feel free to interject. It's a discussive something. Yeah, please.
Okay. I noticed like a trend now where couples own a company, and where maybe the husband is a chairman, the wife is a MD, stuff like that. They are all both on the board of directors. Is that allowed? Is that ethically okay?
Fantastic question. So for sole proprietorship, when you talk of sole owners, entrepreneurs is allowed. They are the owners of the company. So those are mainly medium or small scale company. So those ones are not required.
Small scale.
Oh, okay. So are they like
limited
listed?
liability.
Oh, okay. Yes. So limited liability companies are also allowed. So they may be big, but then they are the owners. So they've not gone quoted or they've not gone listed. So this audit strategically looks at public interest companies or public listed companies. So my organization is a public interest company or a government owned company. So for PLCs like Dangote PLC, Bua PLC, those large banks, it's prohibited. You cannot see the board chairman or have his wife as director on the board. One of them has to cede that power.
Oh, okay.
Yes, so, but you see
small banks like microfinances and all that, they are
exactly, yeah. So those small or medium size, and most of them are limited by shares. It's allowed. They are the owners. So maybe they have controlling interest, so the husband can be there and the wife can be there, so they have major control. But where other interest, people, the public, their funds and their investments are embedded in this company, you cannot do that.
Okay. So
yes,
big companies, public listed companies. Okay.
Exactly. Exactly. You're welcome. You're welcome. So please feel free to interject. It's a discussive and practical approach so that we'll be able to align it with our exams. Any other observation, questions? Okay. So this ISA 550 is very important because related party transactions are what culminate in most frauds in organizations, and we as auditors need to understand the entity's internal control in first identifying related party transactions. Who approves it? Has it gone through proper verification and review process? And also the disclosure. So where related party transactions are hidden, tests need to be performed on transactions to ensure that nobody has an interest. And also significant transactions, what millions in size and amounts, need to be tested that they are not related party transactions, and high risk areas are identified by auditors to ensure that these areas are adequately covered. So specific procedures must be performed when related party transactions are disclosed. So some organizations are benevolent to or very open to disclosing related party transaction or significant transactions that are discovered outside the normal course of business. So special procedures like substantive tests, making calls to those companies, those transactions, checking them, their receipts, the memos, the vouchers approved. So all those tests needs to be carried out in the course of the business, ensuring that sufficient evidence supports management claims that those transactions occurred from normal commercial terms and they are not manipulated for some directors that maybe the contracts are awarded to their friends or friends, we call it family and friends. So sufficient evidence has to support that. related party transactions are not manipulated, but they are part of the normal course of the business. So this is very important. Take note of this ISA, since it came as a result of the Enron and WorldCom fraud. We need to take note of it and ensure that we expect anything like this from the exams, and also adequate understanding is ensured. Okay, so I hope we understood this standard in the summary so that we can test our knowledge on this. Okay, so let's go. Number one, why was ISA 550 revised? A, to align with tax compliance requirement. B, to address risk from related party transactions and corporate scandals. C, to increase auditor responsibilities in all transactions. D, to eliminate the need for disclosing related party transactions.
I choose B.
Okay, you is going with B.
I
Me
am
too,
going
B.
with B.
Oh, okay, it's I that is going with B. Okay, so you sounded like you. So I is going with B. 8 also is going with B. Okay, so you, what are you going with? U, J, and T, what are you going with?
I said B, sir.
Okay, T is going with B. All right. So we're waiting for J and U. I hope they've not dozed off. Oh. It's like somebody is not on the call.
I think I almost did so.
Okay, U has gone off the call. I think it's network. All right, it's only J now we have. J, what's your pick? Did you doze off?
Yes, I did.
I guess as much. Well, why was ISA 550 revised? A, to align with tax compliance requirements. B, to address risk of...
I don't know what ISA 550 is all about, self.
Wow.
Oh, you need those off. You dozed off.
I just off. I just off.
It's not easy, Jare. Everybody is tired. I understand. Okay, so by way of summary, we talked about the ISA 550 on related party transaction. So we are looking at the fraud that culminates in related party transactions and relationships. So we spoke about an example like awarding maybe 2 directors on the board of a publicly listed company, and they award contracts to themselves. Or this current fraud that goes on in government, where politicians, governors would create a company and put their children's name as the directors and be awarding contracts to those companies. So public entities, public listed companies are prohibited from related party transactions. And if it must happen, it must be disclosed. And auditors will need to really assess the controls around related party transactions to avoid risk of fraud and also manipulations of contracts, procurement in the favor of very close family and friends, like I put it. So Aisha asked a very vital question that where a chairman, his husband, owners of the company, and the wife are directors, what happens in that instance? So I responded by saying there are medium-sized, small companies, or even big companies like she opined, which is true, but then they are not publicly listed. So publicly listed or quoted companies cannot have related parties on the board. Oh, was I explaining the answer to you or the ISA? I was not.
ISA. So from everything you have said is B.
I was just summarizing the ISA, not the answer. So yeah. If you picked B, you are on your own.
I agree.
Okay, so J picked B, but you understand the general concept around ISA 550, right?
Yeah, I do. Yes.
Okay, so it's a good one. Then we'll move to question 2. I think you is not the call. I think he's not off network or something. Okay, so everybody picked B. Final answer B. ISA 550. Final answer. Okay, B. Number 2, what is the key challenge auditors face regarding related parties? A, identifying undisclosed related party transaction. B, verifying the accuracy of all financial transactions. C, assessing tax implications of transactions. D, ensuring compliance with stock exchange regulations. What is the challenge auditors face regarding related parties? Okay, somebody said A. Is that T?
A is the
T, you
answer.
said?
A.
A is
Okay,
the
I
answer.
picked A. Okay, J also picked A. All right, so T and A, what's your pick?
I pick A, sir. I don't.
Okay, T picked A, so we're waiting for A's pick. All right, A, what's your pick?
I'll follow the crowd.
No, you can't follow the crowd. No, no, no. That is exam malpractice. You cannot follow the crowd. I'll seize your paper and I'll tear it up. So you have to pick. You cannot follow the crowd.
A.
I'm picking A.
No, you are not picking A. All right. So let me assume you picked A. We'll see.
I'm picking A.
Okay,
Don't
so
assume. I'm picking A.
all right, all right. So number 3, what should auditors consider regarding related party transactions? Whether they comply with the entity's internal procurement policies, the likelihood of material misstatements due to fraud or error, whether they increase the company's revenue, if the entity can legally hide related party transactions. What should auditors consider regarding related party transactions?
A. B. B.
B.
A.
Oh,
I
okay.
choose A.
So I is picking A. A is also picking. What is A picking?
I'm picking B.
B. Okay. So T, what are you picking?
B.
B. All right. J, what are you picking?
Which auditors consider regarding
I like this. I like this question. It's tricky since we have differing options. What should auditors consider regarding related party transactions? Whether they comply with the entity's internal procurement policies, the likelihood of material misstatements due to fraud or error, whether they increase the company's revenue, if the entity can legally hide related party transactions. So those are the options. Tricky question. I like it.
okay. What should auditors consider regarding them? It's A now.
Whether they comply with the entity's internal procurement policy. Final answer.
I said A.
Final answer?
Yes.
Okay. Final answer A. All right. We'll see.
Wait.
Okay. Let me go back again. What should auditors consider regarding related party transactions? Whether they comply with the entity's internal procurement policies, the likelihood of material misstatements due to fraud or errors. Okay, final answer A. All right, we'll see. Number 4, how should auditors treat significant related party transactions? A, as transactions requiring normal audit procedures. B, as transactions giving rise to significant risks. C, as transactions outside the scope of audit procedures. D, as transactions that do not need additional scrutiny if approved by management. How should auditors treat significant related party transactions? A, as transactions requiring normal audit procedures. Okay, somebody said something.
B.
T, B, okay.
I'm picking B.
Okay, A is picking B, okay. So we're waiting for I and J.
B.
Okay, J is also picking B. So I, what's your pick? I is still thinking. I
B.
is still thinking.
A. B. B, sir.
Final answer. Are you sure it's not A? Don't follow the crowd. Go with your heart.
B.
Final answer.
Hmm.
I'm glad some people will not score 100%. I'm very happy. So, what's your pick?
This is tricky.
Very tricky. I
Very
like it.
tricky. This is very tricky for me.
So you have 3 people pick B, and you're also in a dilemma whether to join them or to stand alone. So
Okay,
final
I want to
answer.
stand alone. Final answer.
So what's your final answer?
Final answer C, sir.
Okay, final answers. Right, we'll see. Okay, so final question for the night. I think it's 9:57. We'll stop on this standard. These standards are getting interesting by the day. Okay, so what evidence should auditors obtain for related party transactions? A written statement from management alone. B, sufficient appropriate evidence supporting management claim that transactions were at arm's length. C, a legal document providing the related party relationship. D, no evidence is required if his transaction is below a certain amount. What
B,
evidence should audit?
B.
Okay, that was fast. I is picking B. T is also picking B. Final answer.
B.
J is also picking B. Final answer. So we are waiting for A. A, what's your pick?
B.
Okay. Everybody decided to go with public opinion. All right, final answer.
No, it's not public.
Okay, personal. All right, let me assume this personal. That's good. Okay, so let's go. Judgment Day, number 1. Bam. Why was ISA 550 revised? Everybody got it. B. Wow. B. Good job, guys. Why was ISA 550 revised? The revision was prompted by major corporate scandals, e.g. Enron and WorldCom, and the need for a risk-based approach in auditing related party transaction. Exactly. Good one. Everybody got it. Okay. Wow. What is the key challenge auditors face regarding related parties? Correct. I think everybody got this too. Wow. A. Nice one. One of the main challenges is identifying related parties and undisclosed transactions that may pose fraud risk. Exactly. Good one. Good comprehensive understanding. Okay. Number 3. This is where the tricky ones came in. What should auditors consider regarding related party transactions? The answer is B. Wow. So T got it, A got it. So J and I picked A. Okay, so let's see why A is not correct. A is not correct because while internal policies matter, the focus is on fraud risk. Yeah, so related parties, take note, ISA 550. Yes, you picked A. I also picked A. So related party... But you got number 1 now.
Number 2, Uncle.
Number 2, yeah, but you were close. They said it matters, but then the focus is actually on fraud risk. So A and T got it because auditors must assess whether related parties could lead to material misstatements due to fraud or error. So related parties actually should be taught towards the culmination of risk of fraud, the risk of fraud. Exactly. So good one. At least you drop points in this question. So let's see another one. Number 4. How should auditors treat significant related party transactions? J got it. B. Okay, I stood alone. Yeah, he stood alone and he fell alone. He picked C. Wrong. So T picked B, A picked B. So the correct answer is B. C is wrong because related party transactions are within the audit scope. Exactly. They are not outside the audit scope. So the correct answer is B. Auditors should treat related party transactions as significant risk because significant related party transactions are considered high risk and require thorough audit procedures. Exactly. So take note of that. And finally, for the night, what evidence should auditors obtain for related party? Oh, virtually everybody got this. Sufficient appropriate evidence supporting management's claim that transactions were at arm's length. Exactly. So B, 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 B. Okay. So J still did 60%. J, you are out for fire. You have refused to go below that 60%.
60%.
I'm telling you.
God, I didn't get nothing.
That's a good one. I also 60%, 3/5. Wow. T got 100%. T now, wow, you did vex. So, he scored all. J2 scored, A2 scored all. Hi, these people, they decide to beat me hands down tonight. All right, congratulations, J. Congratulations, T. Also, congratulations to I and J. You guys tried. Good one. So, this is 10:02. You guys did well. At least you demonstrated substantial understanding of all the subjects. Yeah, thank you. I can see the emojis. Good one. So we may not be able to go into ISA 580 written representation, but it's good we are taking it slow like this, at least these standards that are very essential and intricate to the exam. So let's take them slowly and finish them. And by Friday, I think we should round up. We have 4 more, 580, 600, 620. And I think we should be done with this session. We've overflogged it, but it's good. At least we are having adequate understanding of the standards. All right. So any question?